Good morning, Money Map Press. Hope you guys enjoyed that little teaser of Kenny. I know a lot of you are going to be heading over to his world right now, but in this world, in the main room, we have Tom Gentile talking about a whole bunch of stuff from the crypto and from the general stock markets. We'll be bringing him in right now in 5, 4, 3, 2.
Hey everybody, good morning. Tom Gentile, opening bell, Tuesday, December 14th, 2021. Hope you guys are doing well. Good morning to my Money Morning Live crew. Good morning to our YouTube channel. Good morning, Eric. How you doing today?
Good morning. I'm doing well. I'm just setting up. I didn't have time to get all my buttons set, but I'm doing well. How you doing today? I hope you're feeling a little better. I know that you were under the weather.
So what did I do yesterday? I literally stayed in bed. I can't stand staying in bed all day long. I mean, you know, here's the problem. For me, I can't be in bed more than 6 hours, and then I just get antsy. I got to do something, you know. So I reserve those 6 hours at night for sleep. But if I'm in the bed any longer than that, I actually feel like, and maybe it's a placebo thing, I just start to ache, period. I need to get up. I need to get upright. I need to be doing something.
You know what that is, Tom? That happens to me also. It's because we're getting old, man. The back starts to ache. It's no placebo. That happens.
No, I know. I mean, I got the Tempur-Pedic, and I got the you know, I can do the zero gravity thing and everything. I just don't like being in bed.
You want to be up making money. I get it.
You know what? I can sleep forever, 6 feet under when I'm dead.
Good point.
I just feel like I want to do something. Anyway, good to see you guys here. And you know what? I still feel pretty terrible. Today's program is sponsored by Theraflu and by Advil and anything else I had in my cabinet that got me up and going today. I feel a little bit on the hot side. I will be going to get a test today just to make sure I don't have COVID. But I mean, what if I do? You know? To me, it's just another version of flu, and I'll get it fixed, and I'll be fine. But, you know, Eric, there's one good thing about this. It's happening now and not in 2 weeks, not in between Christmas and New Year's.
That's a good point. Good point. You don't want to mess up the holiday.
Yeah. So what do we got on tap today? So on my radar today is 3 things. Yesterday I talked about an outlook in UVXY. So today I was actually on Money Morning Live and I gave a UVXY trade. I want to show that to you guys. I want to take a look at where UVXY is trading. And in fact, let me go just take a quick peek at UVXY. I can bring this up on the screen so everybody can see it. So I'm going to show you the trade right off the bat. And then what I'll do is kind of give you an idea of how we got to that. So we're going to start with, you know, who done it. And what I mean by that is that if you're reading a book, any of you in the room go straight to the end, to the last chapter to see how the book ends. I'm going to do that now with UVXY. So we're going to be looking at trading a bearish opportunity in this using puts. And what we did was we recalculated and looked at the 16 puts that end on the 31st. Because again, if you know anything about the markets always go, they go down faster than they go up. We know that. So 190 bid by 2. And I was looking at these for $2 or better for the 16 puts. So there you go. That's the first, you know, right off the bat, I wanted to show everyone what it is I was looking at, and more importantly, why. We're going to get to the whys here in just a moment. But we'll start off by looking at the chart of UVXY. So even before this, any of you that are here today that missed me yesterday got to be wondering, well, why did he pick UVXY? Why did he go short on UVXY? What's the pattern here? That's the question. What's the pattern? So to answer the question of what the pattern is, here's the pattern. The pattern is a bearish opportunity that we see right now in UVXY. And this bearish opportunity that we see starts right now. And what we did was we went back in the back tester and I looked at what does UVXY do around this time frame, okay? And is there a pattern? Does it do the same thing over and over and over again? So I did a look back. I went back 10 years. I looked at this around the Christmas Day holiday. And then I got three different choices I can do here. I can either say, what does it do before Christmas? What does it do after Christmas? And what does it do in between? That's before and after. I call that bracketing, where we bracket together days before and days after the holiday. So in this case, I can slide back and forth, and I can go up to 30 days before and up to 30 days after. Now, the more days I put on this thing, the more time it takes to crunch the numbers and tell me if there's a pattern. So I was looking at this yesterday. I was looking at this during the weekend, and I said, all right, we're about 10 days out from Christmas. So let's look at 10 days before, 10 days after, and see what we get. It ran 1,000 tests when I hit the submit button, and it did that in a matter of seconds. I think probably about 3 seconds, the computer came back to me and gave me this. First of all, there's a lot of red on the screen. The red on the screen is actually good. Now, red does not mean we're losing money, okay? Red does not mean this is a losing pattern. Red means this is a bearish pattern, okay? Now, I use colors that help me kind of give my eyes an idea which way that we want to trade this. Reds are typically going to be bearish. I use yellows. Those are more delta neutral trades. We'll discuss those in future events. And then blue or green, depending on my color preference, is going to give me ideas of where the markets go when we're moving to the upside. So you'll see sometimes I'll use blue, sometimes I use green. But here we go. This is the pattern. And what we're seeing here is that the last 10 years of this pattern, looking at 9 days before and 10 days after, this has returned an average of 16%. And you're like, probably got to be thinking to yourself, how is this such a big event in that 19 days? Well, remember, if UVXY is going down and it goes from, let's just say it goes from a 15 to a 13.5, that's a 10% move. That was just $1.50. Okay, it's not much. And because we do notice that UVXY and their counterparts always tend to drop instead of going higher on average, and all we're doing is getting into a pattern drop that happens in a much more precise move and a much bigger move when it does get going, then I feel comfortable with these numbers. And I say to myself, all right, if we can get a 16% move on UVXY from where it is now to going 16% lower, then that's going to put us in an area where we can make potentially a 50% return on an option trade. Okay, so that's where I'm going with this, guys. Now, the other thing that I know is that, and this is something where, I go in and I vet these trades. So I'll take a look at all this information, and then I factor in, really I factor in experience. And experience has taught me that the bull takes the stairs and the bear takes the elevator. And what I mean by that is it takes generally twice as much time to go higher as it does to go lower. We get these pops lower, and they happen very, very quickly. I mean, everybody knows this. It depends on what type of a stock you are in, but you'll typically see markets drop much faster than they go higher. If you're bullish, several different stocks or options, and you get a pretty big move that goes against you, you see that money come out of your account or drop in your account much faster than it took to leverage in, to move into the market and have that money drip into your account. So bull takes the stairs, bear takes the elevator. We're going to use that to our advantage with this trade. So at the very top, 9 days before, 10 days after, we're kind of in that sweet spot right now. We're going to utilize that move that when this market does stabilize, and all we need is just stabilization. Look at the Dow right now. It's down 15 points. S&P is down about 23. The big move is in the NASDAQ. The NASDAQ's down about 0.89%. When you look inside the NASDAQ, where the big mover is? It's Tesla. Tesla's down another 25 points today. People were looking at Tesla options, myself included, and saying to themselves, the stock's at 1,000. How in the world are the 800 and 900 puts trading for premium? Well, now they know why. Because those 800 and 900 puts, which were expensive on Friday, guess what? They're more expensive today, right? We're seeing 900 puts last week that were trading for $5, and they were 10% out of the money. I mean, 10% of the actual stock price, 10% out of the money. Well, guess what? Now they're worth double that. Now they're worth more than double that because we've had a 2-day move in Tesla that has taken us 60 points lower from where we are on Friday. I'm going to get to unusual calls and unusual puts in a moment. But once this all starts to stabilize, then you're going to see UVXY drop in price. And that's what we're looking for with this particular trade. Spot the opportunity. All right, let's move to the next thing we want to do is create that low risk trade. I talked about this on Monday Morning Live, and we were looking at a couple differences. So I showed this chart from July to really about the first week of November when we went from the highs, the 5-month high of 35.63, the 5-month low, it took us down here into the 14s, all right, 14.63, and we kind of double bottomed here. We had that little move up. That was an absolutely insane move that happened in about 2 weeks. You saw us go from the teens all the way up to 25 and then right back down to the teens, and that took less than 2 weeks to happen. 1 week up, 1 week down. Monster move. Getting a little bit of a pushback here today, but again, see the high, this 35.63, and the low, 14.63, and then we saw that stab that came up that took us above the 50% retracement. Right? Now, Voz was asking me this morning, why didn't you use the May? And I could have used the May. Let's go back and let's take a look at 180 days back on this chart. Okay, so now what you see is you see 60 on the high. And guys, keep in mind, there's 2 reasons why I did not like the longer term chart. One is because if you look at this, it just keeps dropping and dropping and dropping. The big initial reason for the drop we saw here is that there was a reverse split in volatility and volatility instruments. And what happened was this was trading a lot lower earlier in the year. In fact, it was so low that the folks that manage UVXY and their counterparts all decided to get together and do a reverse split. And what that is they take shares away and force the price higher. And that's what happened. They forced the price higher, and now it's going down again. And this is more than likely going to happen again in the future. We're going to see this come down to such a low. Once it gets below 10, once it gets down here below 10, then these guys all get together and they make a decision on when they want to reverse split and for how much. Is it going to be a 3-to-1, 4-to-1, or 1-to-3, 1-to-5, 1-to-10? They'll make that decision, but they only make that decision when this gets so low that it starts losing interest among the community. And that's what happens. All right, so what is a 1-for-3 split? All right, a 1-for-3 split is that, let's say something's trading at 33, and and the managers go in and say, we're going to do a reverse split. That means for every 3 shares you have now, you're going to be replaced with 1 share. But instead of trading at $33, it's going to be jacked up to 100. So you're still going to have your same value. It's just we're playing a little game here where we're going to move things around, and the managers are making this advantageous to them. Advantageous because they want to bring more visibility back to the product. The problem with reverse splits is if something is reverse splitting now, it just means it's more than likely going to keep going lower long term. That's what's happening with UVXY. And that's why I like it short, because we're trading with the wind at our backs with an instrument like UVXY. Right? So there's the technical chart of UVXY. We talked about option tables, and here's the December 31st. Now, yesterday, if you were with me, and we were looking at trades in January. I think we were looking at Jan 7. I just moved this up a week just to show you another opportunity. And we're utilizing that bear takes the elevator move. The UVXY 16 puts. Now, these closed on Friday at $2.36. I said this morning that based on the moves we were looking at in the market, we were expecting these to drop down in price because we were expecting UVXY to jump again with the bearish moves coming out of the futures markets, right? So that has happened. We saw that go below 2. It's now trading above 2, right? So great little move in our favor to start the morning off. And by the way, the Dow's now positive. Just in the last 15 minutes, we went from being negative to now up 50 points. Now, let me make this mentioned as well. The S&P and the NASDAQ are still down, but they're pretty well off their lows. Okay, we're going to look at these markets a little bit later in the hour. But in this case, we're looking at that 16 put. Let's just go ahead and see what that looks like when we risk graph that. So a lot of people ask me, well, how do you determine what option prices you're going to trade? Well, some of it's simplicity, and some of it's a little bit more, a little bit tougher to understand. Simplicity is this: when I'm looking at something going down in the market, almost always what I do is I first look at buying the at the money puts. If I see something going down at, maybe even slightly out of the money. In this case, I went slightly in the money with UVXY, but I also believe UVXY, was going to open around 16. So that's an at the money put. The reason at the money puts excite me on stuff to the downside, well, guess what? I'm using price because I'm projecting price to go down. But what else goes down most of the time? Most of the time. What else goes down most of the time when price goes down? Volatility goes up. And if you're buying options, you're buying into a volatility action. All right. So you're putting price and volatility on your side. With puts, I can do that just buying at to slightly out of the money puts. With calls, I like to go a little in the money because price is more important to me than volatility. If a stock is going higher, folks, keep in mind, if stock is inching its way higher, what's going on with time premium? What's going on with volatility? In most stocks, they go down. So, if you've ever traded options before and you buy calls and you're seeing the stock go in your favor, you might be wondering, why isn't the option moving as fast as the stock? Or more importantly, why is my option going down in value? Because the time premium might be dropping faster than what's coming in for you. Okay, this is all important stuff to know when you're trading options. The other thing I look at is I look at risk to reward. And risk to reward is just simply telling me, well, how far do I need to go by expiration? Okay, so I look at three things. What's the worst thing that can happen? What if I'm wrong? What if I'm wrong is that in this case, I'll lose, and here, I'm going to force this to 2, because it says 236, but we know what it was trading for this morning. Let's go ahead and risk graph it at 2. There you go. So the worst that I can do if the VIX and UVXY, if UVXY stays at or above 16, the worst that can happen to me is I simply lose the $200 per contract. Now, the next thing I want to look at is something called break even. How do we determine break even on an option? Break even on an option is determined at expiration, and with puts, you're going to take the strike price and then you're going to subtract what you paid for that option to get break even. So 16 minus 2 equals 14. 14 is my break even. There it is on the graph. Anything below this is profit at expiration. Now, you might notice I got a red line, a blue line, and a green line on here. These are theoreticals. So what my software tells me is that this is today's chart. If I were to cash out today, I'd have a small profit, right? But if I were to cash out next week, 2 weeks from now, or 18 days, 12 days, 6 days, and 0. So these are basically a little less than a week from today. What if VXX goes down to 14? All right. What if it goes down to 14 today? If it goes down to 14 on December 31st, I break even. But if it hits 14 today, I have a profit, a theoretical profit. My software's telling me I should have about $130 in profit on this position. And what it does is it looks at determining factors like how many days are left to expiration. Okay. What's the price of UVXY today? What's the volatility of UVXY today? Interest rates, striking price, the actual price itself. All these are factored in. It's a lot like when someone factors in how much you're going to pay for car insurance. Well, what are the no's? What do we know about car insurance? We know that the price of the car has a lot to do with the insurance. We know that the deductible has a lot to do with insurance. We know that that the driver, all right, the experience of the driver has a lot to do with that insurance. So when you factor all these together, it's very much like looking at options. You're paying for an option based on, again, the car itself. That's the asset. Okay, the timeline. How long are you going to have this trade? That expiration date. That's how long an auto policy would last. And of course, the big unknown component is the driver itself. And the driver in the stock market is volatility, the unknown, what we don't know. That's factored into the price as well. And then it's just a matter of placing the order, and that's using your brokerage account. This is a very simple order. I showed this yesterday. I'm not going to repeat it today. But putting together, buying to open and for how much. And then it's a matter of then, once I put my order in almost every single case, if I'm buying calls or I'm buying puts, immediately upon getting filled on that order, you know what I'm doing? I'm going out there and I am placing my exit orders. Placing my exit orders ahead of time because I want to be ahead of the market, and I want to let if the market comes to me and I'm not looking at what's going on, I want to make sure that I'm ready for that exit, that my order's in place and I'm ready to accept that exit even if I'm not in front of the computer. All right. So let's take a quick little look at our boards and see what's going on out here on the chat site. I am having connection issues. If you are having connection issues, I know there's two things you could do. You could A, refresh the screen, or B, take a look at low bandwidth. And that's that little, right below my face is the little box that says low bandwidth. And I think that might maybe solve the connections you see there, guys. All right. So that's what we're looking at there in terms of connections. Eric's got some nice information up here for you. You can see everything, announcements at the top, all kinds of neat little things down here. The chat box, obviously, we all know where the chat box is. Volume control, resolution settings, and then click if your stream is skipping. There you go. Those are the quickest, best answers I can give you there right off the bat. All right, how's my YouTube viewers doing? Let me take a quick little look over there. Hey, Jeff, good morning to you. And guys, if you have any questions, comments, etc., throw them into the chat box. I'm going to tell you right now, there's no way I'm going to be able to get to all of your questions and all of your comments, but I'll pop in and out. And if we see something that's popular, definitely going to get to that. So let's do this. Let's pop over and let's take a look at my second segment today, which is unusual calls and unusual puts. All right. And in order to do that, I want to take you to our free app that's available to everybody. Very quickly, Tom's Option Tools. Just do a search on Tom's Option Tools in the Apple Store or the Google Play Store. And what you're going to find is you're going to find an app out there that is a premium app. This is available for our premium members. However, we have opened up and let the Morning Report be an app that's available to everybody. So once you download this app, you're going to see an area that has login. If you're one of our premium members, just log in right there. If you're not, go down to the bottom part of the login. You'll see a non-subscriber login. Follow the bouncing ball there, and that will open up the suite of products we have. And the one I want you to look at and click on is the Morning Report. The Morning Report consists of 6 different lists that we have that we run each day in the option markets. Okay, we're going to look at this area right here today, unusual calls and unusual puts. So let's go ahead and go there, and I'm going to do that right now.
Hey, Tom, I'm going to pop in really quick because I noticed that you talked about this app in the last show that we did yesterday. You mentioned it today, but there's other places. I mean, you just had an event here last week talking about your new room and where people can come hang out with you on the regular. I'm popping it up on the screen right now if anyone wants to be part of it. But if you want to mention anything about that too, there's more times where people can come hang out with you and learn.
Oh, yeah. So I'm barring, Eric, barring yesterday, because I was so sick, I couldn't, I needed to stay in bed for the day. But Typically in the afternoons, my team and I will come out here and we will do sessions on this, much more detailed sessions. And so we have a couple different ways you can follow us. Just to give you guys an idea, Mike Wade, who's one of my trading partners, is going to be on later today. And he's going to be doing some stuff in surge strikes and looking at trading volume and volatility as well. Tomorrow, for instance, I got Jay Harris that's just coming on, and he does a really good in-depth section on the money calendar. And also we have a little something we call Money Calendar Trader and how we put all that together. Thursday, we talk about Rocket Wealth, and Rocket Wealth is our high probability strategy. We do that as well. And that's really cash secured put selling, probably one of the best track records in the entire industry, I might add. And then, of course, Joe pops in on Friday and kind of puts everything together. But we do this for our premium members. If you want to take a look at our premium services, you got a phone number right there on the screen. Take advantage of it. We've got some of the Money Maps putting out our premium services at some of the lowest prices of the year. So check them out. All right. Check this out. Unusually high call option volume and unusually high put option volume. We've got those on both of these right here on the screen. Let's look at the high call option volume. Now, the way this is broken down, guys, is we've got our stock in question. All right. Easy to understand. The next section is going to be the actual option in question that has high call option volume. And then, of course, the third is the price that we closed at yesterday afternoon. So this particular list, all of these lists are taking it at the end of the day. So we're able to look at these, as early as yesterday afternoon. But I'm looking at these coming into the morning. Viacom. So this is the January 21st, 2022, 13 calls, all right? Went out at $17.40. And yet there are over 62,000 call options that traded, 62,005. Now, I look at that number and I think, wow, 62,000 contracts were traded of the 13 calls, and somebody went in and did a 5 lot and kind of piggybacked on this. That's what I see. Here's Macy's, okay? This is the Jan 21st 15 calls for 2022. They closed out at $10. There was over 8,400 contracts that traded this particular call option. Macy's, here's MGM. All right, also the January, in this case, the January 21st of 44 calls. These traded at 90 cents. Now, when I see a call option that trades at $17.40 up here, and I see this Viacom, that's deep, deep in the money, all right? What's going on here, right? Someone could be selling this against stock that they own. Someone could be buying this against stock, a stock position they have as well. Same thing with the $10, but when you see number 3 over here, this 90-cent call where over 11,000 contracts traded at that 90-cent price, this is more and more looking like a buyer coming in that is expecting, this customer is expecting that MGM is going to trade well above 44 here between now and January 21st. They see something happening that others don't, or what they believe is going to happen in the future. So that's what we see happening with MGM. Now, what I can do is I can pop in here and I can look at these. And let's take a look at this particular option itself. If we were to buy the 44 calls, as we see, stock dropped down, but we haven't hit that low down here at 38. And that's what the trader's looking at. They're looking at this snapping right back to these 44 highs and then some over the next 39 days. And they're willing to put 90 cents per option, all right, 90 cents for this 44 call into this trade because they believe they're going to be right. That morning report, why 62, 8, and then 11? Shouldn't this be ranked by volume? No. What we do is we look at what Viacom options trade at over the long haul, and then what this spike up represented as a percentage higher for Viacom. All right, and Viacom rose to the top. It's at the very top. It's number 1 on the list because we're seeing more option volume coming into this particular strike price now than what we've seen in recent average volume for Viacom. Same thing for Macy's, MGM, and the likes of the rest of them. But you can see here these top 10. All right, what do these top 10 all have in common? Well, simply put, no pun intended, their call option volume is higher than it has been in quite some time on these specific strike prices. Notice PFE, Pfizer's on here, NVIDIA, Qualcomm, Affirm is on here, CCL, that's Carnival, NCLH, another, that's Norwegian, and then BBWI to round out the bottom. So we see a couple of leisure stocks in here, some tech stocks, all right? Here's this may be vaccine related, Pfizer, MGM, obviously leisure, Macy's retail, Viacom communications. On the put side, we see the opposite. What I'm looking at here is I'm looking at unusually high put options, AT&T all the way at the top. This is the March 18th, 22 puts, traded at $1.29 and had over 20, almost 21,000 in volume. Ford came in at number 2. Ford's talked a lot. Ford is talked about a lot on not only this program, but many of the other programs here through the Monday Morning Live channel. So we see that as well. Just want to note that the February 18th, 16 puts got a lot of volume traded in them yesterday and closed out at 39 cents. I see Uber on here. Uber showing the June 17th, 30 puts, all right, over 13,000 traded, closed at 263. Bank of America's on here. NEO, American Airlines, XPEV, AMC, no surprise there. Starting to see these meme stocks kind of popping around a little bit. These are the 17 puts for AMC. WFC is on here as well, Wells Fargo, and Peloton to round out the top 10 in unusually high puts. Again, what I'll do is I can click on the symbol AMC. And if I click on the symbol, it's actually going to show me the stock itself. Notice AMC used to be trading up in the high 40s, had that earnings report that came out, and now it's been dropping. Any meme traders that have been hanging on to AMC, looking for the moon, looking for 100, looking for 200, etc., gotta be kicking themselves right now as they've seen this stock now drop to about half the value it was coming out of Labor Day weekend, right? You can see that happening right here with AMC. What this is this is the actual put option itself, and you'll see the bids and the offers on this put. We get some implied volatility coming in here saying that the IV is going higher. This is great for put option buyers. Delta's dropping, Gamma, and this is our look at all of the information that we want to look at in terms of Greeks. There's your option volume. Want to know why this particular stock option is on the unusually high put volume? Look at that. Boom. Big numbers where we just saw very little trading throughout the last few months. Open interest has also been climbing on this one. And so we see the open interest number pop up a bit. And that would be indicative of seeing that some of the volume coming in here was adding to long positions, or not long positions, but open positions. All right, so there is that's AMC. And again, I looked at AMC, the link. If I come over here and I actually click on the option itself, it would show the risk graph of actually buying that put option. Okay. So that is our unusually high, unusually low put volume. Now, let's move into our third segment for the day. And that third segment of the day is looking at something I like to call triple stack. Triple stack is a term we use on a trading strategy that we use called darknet. Now, darknet is, I was a big, and I still am, but it's just hard to follow, a big Elliott Wave fan. Because Elliott Wave, to me, meant everything in terms of a trading strategy that I think worked. And at the time, and I still believe it does. I just think it's hard to track. So let me give you guys some details, all right? I want to know something from the 1,200 plus of you that are with me right now live, all right? I want to see if you fall into this category. How many of you in the room have taken a trade and you put it in backwards by mistake, and it actually was profitable? How many of you have been guilty of that? You were nervous when you put a trade in, and you actually put it in the wrong way. And then you realized you put it in the wrong way later. and you looked at your brokerage account and you saw it made money. How weird is that? First of all, you're like, oh, I'm glad I made money. And then you look at it and it's actually kind of demoralizing because the market just proved that you were wrong. And the only reason you made money is because you screwed up and put it in backwards. Eric, are you guilty of this?
I can't say that I am guilty of that because I can't say that I've done that. So I haven't done it backwards. No.
Let me
Is that,
tell you why.
am I lucky?
There's a lot of me's in here that are coming across the
Yeah.
board right now. I mean, bought puts instead of calls, me. Some people sell options instead of buying them by mistake. And some people think they're closing something out, they're opening something entirely different.
Mm-hmm.
I'm going to tell you 90+% of the time it has to do with options. It's not stock. I mean, you think about a stock trader, most people I know that trade stocks do not short stocks. They just simply buy because they believe for one reason or another the stock is going up. So the errors are typically not in the stock market. The errors are typically in options and any of us out there that trade futures. If you trade futures, then what's the terminology in futures? How do you make a small fortune in futures trading? You start with a large fortune. That's how you make a small fortune in futures. Anyone that trade futures, you know what I'm talking about. That's a very very calculated place. You've got to be experienced to go in that area. But coming back, all right. The reason I brought this question up and the reason I wanted those of you in the room, and so many of you in here, double there said me, I've done it twice. I've done it too. I've done it more than once because I had my hurry up offense. All right. That's when I see something and I got to get into it right away. And I put the trade in the wrong way. Now, the reason I say that is because if you're guilty of that and you made money, guess what? You mistakenly traded contrarian to the herd because most of the time, if you did that and you made money, you were trading with the herd. The herd lost money. The only reason you made money is because you put the order in backwards. So when I first did that, then I realized, wait a second, this is important because my screw up made me trade against the herd and I made money. Let me learn a little bit more about trading against the herd. So basically, darknet is very similar to Elliott Wave. We're looking at trading against the herd, trading against what would be logical, what would be normal. And so the big difference on darknet is it's a contrarian trading strategy, but we use channels. We use channels to find better buying opportunities, okay? The big thing that I like about our channels is that they're steadfast. They never change. Elliott waves change all the time. Wave counts change because the chart forces the change to happen. I would rather be in a signal where I know I'm losing and the signal says I'm losing than to go into an Elliott wave 4 buy and then the 4 changes because we get a lower low, because that to me adds insult to injury. All right, I'd rather have a channel that stays as a channel. I have a buy signal and then it drops lower and I can see, okay, yeah, that's where I am and this is where it's gone. And again, I say this all the time, folks, nothing is 100%. Nothing's 100%. Keep that in mind. But I'd like a better visual on where I am, hence where I see a buying opportunity. Now, darknet is a buying-only strategy. All right, we don't look at selling positions or going bearish in darknet. It works so much better to the long side. So I do get questions that pop up from time to time about our darknet strategy from the folks that use our software, and they say, well, does it pick stocks that go up in a down market? And the answer is yes. Yes, it does. Right? I'm going to show you one right now that is more of a random opportunity than I've seen in any other place out there. But the way darknet picks this is we look at something called triple stacks. This is an example of a triple stack where you see a chart that has tried to create a bottom. We started moving higher. This is the longer term. We call this the precipitation move, is the move that we see the longest term move. Then we see a pause. I call this a parallel move. And then we see a propulsion move, which is a quick little move back. And where we see all three of these start to come together and create, or at least two of them, where we see long, short, and intermediate term all converging together, colliding together. That's channel collision. That's where the triple stack happens, okay? And so triple stack happens right here. This is what the software just sees, because the software doesn't draw lines. Well, it does, but it has them automatically in place, right? We put thousands, tens of thousands, hundreds of thousands, millions of lines of code to spot these opportunities. What the software says is there's a stack, there's a sell. There's a stack, there's a sell. Here's a stack. Nothing stacked out over here. Got a stack here though. Okay, we're able to see this in any stock that we follow. Now, what do I find works really well? I find what works really well is where we see liquidity. All right, I would not put this system or these signals to the test on stocks where nobody's trading. And those are those 5-letter symbol stocks. There's a reason why I look at 4 letters or less. I think Comcast might be the only stock I trade that has 5 letters in its symbol. Google is another one. All right, very few. Most of them, 1s, 2s, 3s. That's where most of my trades all revolve around. 1, 2, or 3-letter symbols. And some 4s because, that's where tech stocks are. It's where FANG is, 4s and 5s. For the most part. But what we're looking for is we're looking for liquidity. I want to be, in order to be a contrarian, you have to be opposite of a herd. Where does a herd usually graze? In big pastures, in big green pastures. And we're looking for the big green pastures in the stock market. So I take those top 300 to 400 stocks, okay, that are optionable. That's the top 10% of all optionable stocks are where I want to go when I'm looking for these type of trading opportunities. So let's look at some examples here. And what I'm going to do is I'm going to pop in and I'm going to find, let's see, I've got some darknet stocks right here. So I've already ran my darknet and I can see here that I've got 4 interesting trading opportunities on the list. So I could scan and do all kinds of things here. Here's Vicker. This is silver. This is silver. This is silver. And then I've got some R's beside all these. Now, let me explain what it is we're looking at. When you create trading strategies, when you're in the business of actually back testing, setting rules, creating strategies before you even start to plan these, the questions I ask myself is, well, is this a one and done trading strategy? It means if I get a signal, am I looking for an exit and I'm done and I might look for the next signal? Yes. I mean, those are, for instance, moving averages is a one and done. When you get a moving average cross, you're not going to get another buy signal until you get the sell. So it's going to be in, then it's going to be out, and it's going to be in, and it's going to be out. Okay. So if you look at, for instance, darknet is up to 3 signals in the same direction before we get an exit. So we get what's called a buy, a rebuy, and an add-on. B for buy, R for rebuy, and A for add-on. Well, we're seeing a lot of rebuys coming in because in this case, silver typically, first of all, it's random, all right? It doesn't move with the stock market every single day. Second of all, very liquid, all right? So it accomplishes that too. And third, maybe that triple stack compression has other areas where it's hitting the stack. So out of all 3 of these, and I can look at all 3 of them, let's look at ACG. This is a ProShares Ultra Silver. As you can see, trending down. But again, I'm looking at more than just the chart you see here. All right. So what darknet does is it goes back further in its past to find these triple stacks. I find that this is interesting. Had a triple stack about a week and a half ago, has another triple stack happening today at the same price. So you get a second chance here. Also, that high is lower, is actually this area here seems to be close to double bottoming from what happened in October. Now, what I'm doing here with you folks right now is called speculation. I am speculating what the stock is, what this is looking like. I'm analyzing it. Okay, I'm analyzing and saying here's a bottom. I'm analyzing and I'm saying here's a top at 42. And then you have to go all the way back to August before you see it higher. This is all analyzing. The world is full of analysts. We don't need any more, although what I do is try to set you up what I am doing, okay? So here you go. You got that double bottom happening. Let's take a look at SLV. Now, one more thing. Pro shares. I'm not a big fan of trading pro shares, all right, unless I'm going to day trade it. I'm not, or if I'm going to trade it to the downside. If I'm going to trade it at the downside, it's one thing, because these things tend to move to the downside. I would rather look at SLV, especially because SLV is going to be the most liquid of this bunch. SLV also shows a low back at the beginning of October. SLV also shows a buy and a rebuy at precisely the same days. The last time SLV had a buy was at 22, and the sell came in just above 23. So it has short-term moves. Is it possible that this move could come and then be gone by the end of the year? Yes, based on what we've seen happen in the past with SLV. There you go. So the last one we can look at is SIVR. All right. This is the physical silver shares. Again, it had that buy and that rebuy from 23 to above 24. It had the buy and the sell 23 to 24, had the buy and the rebuy, pretty much kind of sitting right there, had that lower low. So you can see like instruments are giving signals in silver. Silver is that it's referred to as the poor man's gold. Okay. And so you can see here that we're looking at liquidity. We're looking at bullishness. We're looking at all kinds of areas here, spotting that opportunity. Now it's time to move to the next thing. So we pick one. We pick one of the three. Victor's actual stock. All right. And I can look at Victor, but here's Victor. I don't like what this looks like? The Price is Right, where they had that guy climbing the mountains. And then he falls, right? Because he falls when they guess the price is wrong. He goes over the cliff. That's what it looks like here. This looks like, and then he falls over. Does everybody see that? I don't want to catch that falling knife because I don't see any kind of support. We've gone through a lot of support here. So, this is where, again, I look and I vet these and I look at them myself. And of the three, we've got AGQ, we've got SLV, and we've got SIVR. Let's poll the audience real quick, Eric. So which of these three would you in the room want to look at for further information? AGQ, SLV, SIVR. We'll take the most popular one.
It's SLV. SLV is the most popular one so far.
Yep.
A sprinkle of others, but
I'm out there looking at the YouTube stream too. These guys are very quiet.
Speak up.
They're very quiet out there on YouTube. Okay. I see an SIVR that coming out of YouTube, but I've got to tell you the overwhelming response is SLV, and I like SLV. I'm glad you guys want to look at SLV because it is the most liquid of everything we're looking at here. So we're going to look at SLV. So once again, I got the chart of SLV. Let's throw that up here. You can see the past has worked, and the past is showing us about a 2 to 3 week move. So in this case, when I get a buy and I get another rebuy, this is telling me that we've got to extend that 2 week move, that 2 to 3 week move out. So more than likely, we're going to be looking at options that expire in January. The second thing I want to look at is, well, where's my target at? My target could simply be, well, if we're trading around 21, or just under 21, maybe we look for a target of 22. And can we make money in a 1 point move in SLV? That's what we're going to look at now. So I want to pop over to options. Let's go look at some option chains. And let's take a look at here. So again, SLV is going to give you lots of different option ideas. I've got all kinds of expiration months here. So I don't want to look at December 17th, Eric. The reason why is that darknet, very much like the money calendar, like a lot of other strategies I look at, are roughly 30-day trades. Okay, they're 30-day trades. So a 30-day trade would really take me out to around January 14th, not December 17th. So I'm check marking Jan 14th. Now I noticed that I've got 30 different option strikes out there. They expire 32 days. But then if I just go out another week and I go to Jan 21st, I have 70 different strike prices I can deal with, and I have 39 days to expiration. So let's take a look at both of those. Now over here, what am I doing? All right, I'm going to look at option strikes. And what I want to do with SLV is it's telling me, let's take a look at where SLV is today, and let's look at option strikes. These are the striking prices that we can exercise or be assigned on. Go 30% above and 30% below what the price of SLV is trading at currently. Let's go ahead and click on update. And what I'm doing is I'm now gathering those options. Now I'll just take you through the through what it is we're looking at here, and then I'll walk you through this once again. But I have columns, option symbol, what the quotes look like. This extrinsic, this tells me the time value of what these options have, so I can quickly see what has time value and what has real value. Okay, I have implied volatility here, a little harder to understand, but it gives me an idea of how cheap or expensive these options are. And then I've got something called option delta. The option delta means if we have a 1 point move in the stock, how much as a percentage should that option move? Okay, so for instance, if you have an at-the-money call, they typically have a delta of near 50. That means if the stock goes up $1, the option should go up about 50% of $1 or 50 cents. So there you go. So take a look here at the bottom. I've also got volume and open interest, but here are the call options right now for SLV that expire on January 14th. Notice this is if I'm looking at the stock, at the asset trading at 2061, we've got near money options at 20.5 and 21. The 20 half calls are 67 by 69. The 21 calls are 44 by 45. They don't get any better than this, folks. When you're 1 or 2 pennies between the bid and the offer, you have extremely high volume, extremely high liquidity here. Now, I don't want you to go and do this. I don't want you to come over here and go, yeah, man, but there's only 245 calls that traded yesterday. There's only 438 calls that are in open interest today, the contracts. That doesn't sound like high liquidity to me. Remember, options liquidity is not based on volume, and it's not based on open interest. It's based on bid-ask spread. That's where we base liquidity. So when I'm looking at the difference between that price and that price, that's the most important thing to me. Okay? Now, if we're looking for this instrument to go to 22, if I buy the 21 call for 45 cents, this is a question, by the way, for the room. How much, if I buy this call option for 45 cents, if we go to 22, how much profit could I make? What's the intrinsic value going to be for the 21 call? 10. No. Good try, Mr. P. 50%. VW got it. 55 cents is what I'm looking for, guys, because, and here's why. For those of you that are just kind of curious. First of all, that 21 call is going to be worth $1. So any of you that said $1, you're halfway there. But I said, how profitable is it? So if you pay 45 cents for something that's going to be worth $1, because again, if SLV is trading at 22 weeks from now, then you have a minimum of $1 on the trade. That's just the real value. There might be some time value added on there as well. Okay. So you've got a 21 call that's now, if the asset's trading at 22, you can buy it at 21. There's $1 in there. You paid 45 cents for something that's worth $1. You have a 55-cent profit. Well, what's our target? Our target is 22. And if our target's 22, then we possibly can make a double on this trade. So that's what I'm showing you here, guys. All right. Spot the opportunity. What's the opportunity? The opportunity is SLV triple stack. And now it's just a matter of planning that low risk trade. This is an example of a great low risk trade. Placing that order, managing that order, exiting that order. I place these orders. Most of my orders are limit orders. And then once I'm filled, I'm immediately saying, all right, if I want to double on this, if I get it at 45, my double's 90 cents. Let me go ahead and put my limit order in at 90 cents. And then I just go on my way. That's what I do. All right. So that's the first couple things I want to do today. Let's spend a few minutes talking about cryptocurrency, because that's always in the news. The craziest market on the planet right now is cryptocurrency. Some news that we scraped up that I wanted to talk to you about today, as I'm starting to lose my voice again. Is it NuV? Am I saying that right, Eric?
It sounds good to me, Tom. I will go with your call there. NuV.
Yeah,
sure.
Canadian-based electronic payment processing company. All right, they're partnering with Visa. And what they're looking at is creating some crypto-friendly debit cards in some European countries. You know what's amazing? Europe is embracing cryptocurrency. Europe, and I'm not talking about Eastern Europe, I'm talking about Europe. They're embracing the crypto world. They know, they are on board, knowing that this is the way that the market and the economy and basically humans, this is where we're moving to. We're always trying to better technology. We're always trying to build a better mousetrap. And digital assets are the new mousetrap, okay? So Simplex is a subsidiary that they just bought. They paid $250 million for it back in May. NuV is adding, to support 40 different digital currencies. And you'll be able to access several of these with the card. So wanted to mention that. That's a big positive. Here's a negative. Let's go a little bit east of Europe. And Russia has decided, should we even be surprised at this? Oh, Russia's going to ban mutual funds from buying crypto. Because again, whatever China's doing, you can bet Russia's going to be right there doing it too. I mean, honestly, do you think for a minute that if China is banning cryptocurrency, that Russia's going to come in and embrace it? No, they're not. China and Russia in this area are on the side of the past. Europe is on the side of the future. I believe the U.S. is on the side of the future, but the U.S. is kind of sitting here saying, well, yeah, utility tokens, we're all on board. Security tokens, however, we want to spend a few years debating this in Congress. And I do think eventually all of this is going to pass in Congress, because these guys would be fools. They would be absolutely foolish if they did not pass and embrace all of this, because all of this benefits the Treasury, does it not? I mean, legitimizing Bitcoin, legitimizing digital currency, it's just going to benefit the Treasury. And I mean, Eric, I don't know about you, but if I'm in the business of collecting tax revenue, is it easier to collect tax revenue on cash, or is it easier to collect tax revenue on digital cash or digital assets? You tell me.
I mean, I would say on digital assets, it's easier to track that stuff. Tell me
exactly.
I'm right.
It's easier to grab your share of it too if you're the government looking to grab those shares. NFTs. I think I asked you this before. You're an NFT guy, aren't you, Eric?
I'm an aspiring NFT guy. I'm trying to learn more about it. I'm more in the crypto. NFTs are scary right now. They're everywhere. They're coming out like crazy. You could make money, but you could lose a lot too. How about you?
Yeah. I mean, you know what? That rock, remember the rock that traded for what was it, $2 million?
I don't know that one.
It was one of the very first pieces of digital art that came out. It was a rock. And I saw it auctioning. And at one point, it was at $1.6 million for this digital rock.
Yeah.
And I'm thinking, wow, this is like the new moon rocks. Remember I don't know. You remember moon rocks, right?
Yep. I also remember pet rocks.
You had to be a kid. You mail away and you get this thing that you thought was a moon rock, but it wasn't a moon rock. Come on.
No.
It had no, I mean, it was a piece of granite disguised as a moon rock. So
but you paid, you subscribed to it, right?
the pet rock.
Yeah,
Yeah,
I remember the pet rock.
went digital. That's what Tony's saying. Tony says the pet rock went digital. It did. And someone was bidding up 1.6 for it. Now, I think there are some NFTs that I think are going to be valuable, but this space is going to be like, it's like going to be like everything else. There's going to be a few things that are out there that are valuable, and there's going to be, most of the stuff's just going to be, it's going to be what you paid for it. If you're buying an NFT, you better be buying it for reasons other than thinking you're going to make money on the sell side. You want to be buying it because you're going to get a piece of artwork. You're going to get a piece of digital artwork that if it's a one-off, then you own it and nobody else does.
I think that most people, though, that are buying these NFTs are trying to make money from them. Most people don't buy digital art because they love the art. Most.
Absolutely.
Yeah.
Yeah. So, as I end this out, like I have done, and I try to do this, is we spend about 5 minutes or so talking about the cryptocurrency markets. Two positives, one negative. Turns out the one negative is what pushed crypto back down yesterday, pushed it down again into this morning. But this is, I'm going to end with this, guys. This is the sweet spot right here. This $44,000 to $53,000 range. All right, we're in the sweet spot right now. That range finder, if you will. And so I really would like to see some big volume, not a spike like we've been seeing. We see these little spikes up, and then all of a sudden we wiggle sideways. We start to trade back down. I want to see a spike up on some huge volume, and we need to see 2 or 3 days where we see advancement, and then I'm going to get real excited about where cryptocurrency are going. But we're in the sweet spot right now. I think we may stay in the sweet spot here for the remainder of the week. But as we come into the holiday season, we'll talk about this a little bit more retrospect and going forward. That less liquidity, I'm looking for a big move with less liquidity coming up starting next week. So thank you all for joining me. Eric, it's a pleasure hanging out with you here for the hour.
Always a pleasure. Thank you.
All you guys here on Monday Morning Live or YouTube, I will be back again tomorrow. I'm actually feeling a little bit better after doing this for an hour with everybody. But be back here again tomorrow, same time, same place. Thank you all very much, YouTubers and Monday Morning subscribers alike. We'll see you tomorrow. Bye now.